You may remember that in November, right after the FTX collapse, I sent a tweet that said, Wall Street is going to buy our entire industry for pennies on the dollar. Watch, or something to that effect. And it's an idea that I've been sharing and talking about for even years before, that eventually we would see pushback from the United States government opening the door for the Wall Street incumbents. If you saw me on Yahoo Finance, I talked about this quite a bit. Well, it's all happening right in front of our eyes. EDX Market's going into business. That's the exchange that's owned in conjunction by Fidelity, Citadel, right? I mean, the biggest names in the space, and Charles Schwab. CZ just tweeted that Deutsche Bank has applied for a crypto asset license. BlackRock applying for an ETF. It's becoming very clear. They're not trying to kill the crypto industry in the United States. They're trying to kill the incumbents. They can hand it over to their Wall Street cronies. We're going to talk about this. I've got Mike Alfred on for the first half to talk about everything happening with BlackRock, GBTC, Grayscale, Fidelity rumors. And then we're going to go on the back half, as you know, with the new format, talk to Big Cheds about some trading ideas that he has. Going to be a massive show. You guys do not want to miss this. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and drop kick that like button. Just smack your keyboard all the way across the room, smash it against the wall, and send Mike Alfred the bill. Don't send the bill to me. Send it to Mike. Guys, as I said, very clear what's happening in the United States at this point. A wholesale takeover of the crypto industry by Wall Street and friends. Now, we know that they're being assisted, obviously, by the government with the widespread crypto crackdown by Gary Gensler and his cronies and friends. But it's becoming a true question as to whether Gary Gensler has massively overreached, is way out over his skis, and potentially could be in violation of the law with this massive overreach that we are seeing. But we'll get into that in a minute. I just want to say that no matter what you think about this Wall Street takeover of crypto, I hate it. In theory, it's bullish for the asset class, at least certainly for Bitcoin and anything else that has not been deemed a security. We can fight all day about how evil BlackRock is, and they probably are, certainly how evil the Citadels and JP Morgans and maybe even their cousin, Charlie Schwab. But the fact is, if we get approval of things like a Bitcoin ETF from BlackRock, and there's any volume coming into exchanges like EDX Markets, and Deutsche Bank comes in, and JP Morgan comes in, and Fidelity quintuples down on the space because they've already doubled, tripled, and quadrupled down, there's no question that this gives the stamp of approval to the asset class for American investors. Whether that's just accredited investors or institutions remains to be seen. But as I said, it's very clear right now, this is not an attack to kill it. It is an attack to control it. And I think that that is very, very clear and a very important nuance. Now, before Mike jumps in, I want to talk about a few ideas here. We're going to obviously talk of the ETF and the investing side of it and what it means to death. But we're seeing quite a bit of pushback now against Gensler et al. Former SEC advisor, legal doctrine could end Gensler's crypto crackdown, talking about the major questions doctrine. This is from J.W. Verrett, who was actually an advisor to Gensler. And of course, because this happened today, we decided to get him on Crypto Town Hall. So the actual advisor, J.W. Verrett, or Verrett, we'll see how it's pronounced, is going to come on to Crypto Town Hall by Twitter Spaces at 10:15 a.m. Eastern Standard Time to discuss this. But what is the major questions doctrine that might be in violation here? The major questions doctrine is a legal doctrine that challenges the authority of regulatory agencies and could potentially put an end to SEC Chairman Gary Gensler's crypto crackdown. So how does this matter for the SEC regulatory action in the crypto space? The major questions doctrine could challenge the SEC's reach and authority in regulating digital assets that operate on decentralized blockchains. Now, we might not get a lot of clarity on this until Coinbase and Binance US, but there is major legal precedent here for the government and legislators to take control when a regulator or regulatory agency pushes too hard. I think that Gensler has gone too far, and we are going to see him fired. Now, listen, we try not to go down the road of tin hat theories too much. And Adam Cochran has broken a lot of great news, but also has spread some FUD at times. It ended up not being true. But Adam Cochran here heard from a friend. Yeah, I don't really like news that starts with heard from a friend, but we do it quite a bit. Heard from a friend that the rumors in the DC fundraising circles are that the Biden team wants to shake up some chairs, cabinet positions in the finance sector to take the heat for the economy before the next election. Yellen tops the list. No surprises there. Dumb and Dumber haircut is so 90s. But apparently plenty of big ticket donors have mentioned Gensler as well. Oh, you don't say. Even ones who agreed with his stance on crypto are embarrassed by his approach. Starting to look like Warren, Yellen, and Gensler brought down the hammer too hard for even their own party. We know that, guys. The anti-crypto army is a very small part of the Democratic side of the aisle. There are plenty of Democrats who love this industry. They just aren't talking about it right now because Lizzie Warren is really scary. I would have guessed both Powell or Yellen would be on the chopping block. I think that actually people view Powell as doing pretty well, I hate to say. But Gensler's lack of professionalism is rubbing his own party the wrong way, and so tides are turning. If we keep highlighting the absurdity of his approach, he may get reined in. Of course, we always get these types of rumors and strategy talks before a re-election, so hard to say what weight it holds, but it's clear that their most connected donors are starting to talk. Yeah, there's very widespread news that people don't like Gary Gensler, including those who work for him. Many people have quit. Lots of pushback. He's disliked. He's Elizabeth Warren's kind of little bitch boy, bring out the GIMP. Pulp Fiction, you guys bring out the GIMP and you do the fingers. So yeah, this could end really badly for Gary. So what I want to say to you before we, bring on Mike whenever he shows up over here is that keep tweeting fire Gary Gensler, right? Even if that only has a very small effect, when that's trending on Twitter, people notice. Call your senator, call your congressman, have ChatGPT write you a letter that says, I think that the SEC has massively overreached and I am a single issue voter and will only be voting on crypto. If you get rid of Gary Gensler, I'll vote for you. Do that. It works. You'd be surprised. But now we're going to obviously dig back into BlackRock. I'm going to bring on Mike Alfred now since I see him here waiting in the wings. What's up, man? We got you up bright and early today. Appreciate it.
Yeah, it's rough. I don't know what it is about getting up this early, but it is what it is.
I'm always up at that time. Okay, so listen, you jumped on Spaces yesterday. You had some incredible points, but I want to dive deeper into this with you, obviously. So the news of the week, the only thing we can talk about is BlackRock and the Bitcoin ETF. Of course, we take the hyperbolic approach from Blockworks here. It says the wolf enters the hen house, and that's based on Mark Yusko's quotes. I have to give Yusko credit. He's been saying for years there will be no ETF until BlackRock comes in and asks for one, and that literally happened. So I don't know if it was a crystal ball. He said it was just too obvious. But regardless of your thoughts on BlackRock, how big is this for Bitcoin specifically?
Well, it's put a lot of things into play. Certainly. So irrespective of whether it gets approved, I see a bid under Bitcoin in the last few days that I haven't seen in a while. There's a lot of rumors about other asset managers like Fidelity getting involved here. There's potential movement at Grayscale, at GBTC. I own a lot of GBTC in part because I have a fund that has limitations on how much spot Bitcoin that I can hold with the prime broker. So people are always giving me a hard time. Why do you own so much GBTC? It's like, well, if I could find a prime that focused on equities that would allow me to hold an unlimited amount of spot Bitcoin, then it wouldn't be an issue. But it turns out there's still structural reasons why people hold it. So I think, BlackRock making a move here, even if it's not successful immediately, puts a lot of other things in play. Like one of the things that I'm imagining happen right now is Fidelity potentially negotiating with DCG and Barry to potentially like back channel in a sense with the SEC. It's something you kind of see in biotech, for example, when like a larger biopharma buys a smaller biotech, like that larger firm sometimes will buy the set of molecules before FDA approval because they have enough confidence that it will be FDA approved and they want to buy it essentially beforehand. I could see a scenario where Fidelity sort of gets through a back channel, they sort of get a blessing that, look, we will settle with Grayscale, right? The outstanding lawsuit, if Fidelity takes over that trust and promises to do the same things that BlackRock is doing. So we don't know for sure what's going to happen here yet. It's possible that BlackRock doesn't get approval in the short term, but it's still a very interesting set of things that it put into play.
Yeah, the Fidelity side has been, as far as I can tell, rumor so far, right? We had on the guy who on Spaces yesterday, actually, the guy who had tweeted, hearing from sources, unnamed, of course, that Fidelity could make a play for Grayscale, which is what you just said, and will be filing for their own ETF. And I'm literally like in the background talking to two people from Fidelity who say, well, you could talk to our PR team, but we've heard nothing about that. So we're kind of in that in between of whether something like that is going to happen or not. But what we do know is that Fidelity has been the institution that's been the most committed to Bitcoin from the very early days. They've been mining since 2014 or 2015, have created products. They've had their own ETF, or was an ETP, but that was actually rejected in 2022. So not that long ago, but they've been down this road before. It would make sense, whether they're making a play in the background or not, for them to double down once again. Right, just seeing BlackRock's involvement here.
Agreed. I agreed. And look, I don't think people should discount Fidelity at all. Fidelity has been a believer in Bitcoin for 8 or 9 years. Abby saw the sort of beauty of the system. She said, look, we should mine it first so that we can understand how Bitcoin works from first principles. So, people who are like, oh, these big, institutions from TradFi are coming into the space. It's like, no, actually, Fidelity was here way before Binance, right? Fidelity is a trusted firm with huge scale that's been around for decades. As far as I know, has never become insolvent, has never, screwed depositors over.
Commingling our funds and sending them to their shadowy hedge funds.
Yeah. I mean, I think that's one of the funniest things about this is like, BlackRock starts to come in. It's almost like if you saw Death Cab for Cutie when there were 7 people in a small room, like a small dive bar, and then all of a sudden they have thousands of fans there, and it's almost annoying to you because you believed in Death Cab when there was only 7 people, right? And so I sense a little bit of that in the space. People are like annoyed that BlackRock and Fidelity are active, and it's like, no, you were right. Like, Bitcoin matters. That's why these firms are here. In fact, I would argue BlackRock and Fidelity are much less harmful to Bitcoin long-term than Binance, Crypto.com, Huobi, Celsius, FTX, BlockFi. You go down the list of all of these firms that are not run in a transparent way, that don't have audits, right? That are offshore, that are basically shirking responsibility and avoiding regulation. And Fidelity and BlackRock are literally the exact opposite, right? They have tons of regulation, which is why they've never become insolvent and they've never had an issue fulfilling customer obligations. So I actually think them coming to the space is healthy and makes the entire Bitcoin ecosystem more anti-fragile. I know that's super unpopular, but I don't really care because people have been dead wrong. People have been dead wrong about Binance and about some of these other big crypto firms. And if anything, maybe these, like a BlackRock or Fidelity, will get some of these bucket shop type crypto firms to grow up and actually professionalize.
Yeah, I think the question is, can the adults in the room actually help facilitate the actual crypto incumbents improving their businesses and still being around? Or is this literally like napalm carpet bombing of the crypto industry to make way for those Wall Street firms? Because I agree, in a perfect world where Coinbase exists and is compliant, which I think we all like Coinbase, right? So I don't think Coinbase and Binance or Coinbase and FTX are the same thing, where we still have the Coinbases, but also have BlackRock. I would just hate to see it where it's only BlackRock, Schwab, JP Morgan, Fidelity, right, and Citadel, and we don't have any crypto native companies involved when they're the ones who obviously built this industry.
Yeah, I mean, I think that's a fear, a little like, being an American 100 years ago and being worried about immigrants coming, right? Like it may have some basis in reality. Like there may be some sort of bias amongst regulators for the firms that they've already done business with, in a sense, right? The firms where they're hoping to get a job, right? From a regulatory capture standpoint, they're hoping to get a job after they leave the regulatory environment. They want to work at BlackRock, right? Or they want to work at Fidelity, or they want to work at Goldman. But I don't think it's a systemic thing. Like I don't buy that conspiracy. Like I just think some of these big traditional firms are in some ways more trustworthy than most of the crypto native firms out there. I put Coinbase aside because I actually agree with you. I think Coinbase is different qualitatively in a lot of ways than a lot of these other firms that have blown up. But I still think Fidelity is safer, right? Like if I had to take
There's
$1
no
million
question.
of my own money and I put it in a Bitcoin product at Fidelity or Coinbase, the honest truth is I'm going to put it at Fidelity, even though I think Coinbase is a better business than most of the other crypto native firms. I don't think that's a conspiracy. I think that's just a fact, right? And if you're a
But
rational allocator,
interesting. BlackRock's ETF proposal is to custody with Coinbase.
yeah, and they had that partnership before, and I don't think there's anything wrong with that. I think, look, Coinbase is one of the only crypto native firms that's been willing to do an audit, and has done a full audit for years now, since before I think they went public. And so I have a lot of confidence that like all the grayscale Bitcoin is there. And I have a lot of confidence that if BlackRock uses them as a custodian, that we won't have to worry too much. Now the SEC may hound them for a while because they want them to register in a certain way. Coinbase may have to delist a number of these securities that they didn't want to admit were securities. They may have to re-domicile offshore, although I think that's less likely if they're going to do this custody business with BlackRock for like the big daddy US ETF, assuming that gets approved. But they do need to delist probably some of those securities, or they need to be a traditional securities broker and just hold themselves out for what they are and say, look, we sell Bitcoin and Ethereum, and we also sell these digital securities. But then they need to have the same sort of regulatory apparatus, right? Like issuers need to file reports. All the things need to be disclosed to the buyers of those securities. But I think that can all be worked out. I think this is just the messy part between the Wild West and the civilized metropolis development that's sort of happening. And that may be painful to a lot of people in crypto, but it may be necessary.
I mean, does that mean that we get a Coinbase that lists somewhere between 4 and 10 assets and their custody business because of their deal with BlackRock becomes the bigger side, and we basically just see a shift in Coinbase's strategy and importance?
Not necessarily. Not necessarily. I mean, again, if they just admit that they list hundreds of securities, there's nothing illegal about listing securities. There are just disclosure requirements. There are
but those security, but they're not going. But the SEC isn't going after those securities to register, so therefore, there's kind of this chicken and egg situation.
Sure.
With
Sure, that's what I mean by the messiness part, right? There, like you come out of this period of where it's a Wild West, where you could make a credible case if you're Coinbase that there is no regulatory pathway, so therefore we didn't do it. This litigation, all of this noise now sort of crystallizes the need to finalize it. And Coinbase has a case to be made around the SEC being somewhat intransigent, not providing, transparency into their thinking, their process. But I think that all gets worked out. That's sort of what I'm referring to. I think that all gets worked out over the next, call it 12 to 24 months. And if they want to list securities, they can list securities. Plenty of other people list securities. There are plenty of brokerage firms in the US that sell securities of companies that are going to fail, companies with terrible management, companies with bad balance sheets. But as long as they follow all the disclosure requirements, when they sell those securities, there's not a lot of risk for them. So I don't see why it has to be any different in crypto.
I just want to bring up something quickly because you kind of invoked crypto.com, and people might have missed the news yesterday. Trading teams at crypto.com exchange raised conflict questions. We actually tried to get the author of this article, but basically this is yet another major exchange being accused of counter trading their own customers, right? This is the BitMEX model from back in the day where you go on an exchange, you set your orders, they know where your orders are, and they're market making and counter trading. So just another example potentially of that same systemic sort of bad behavior that you talked about.
And this is the issue, right? These traditional firms, they have to disclose exactly what role they're playing, right? And so when you sign up with Fidelity or Schwab, you custody your assets with them and you trade with them as a broker, but they're not also the exchange, right? They're not also the clearinghouse. They're not also the market maker, you're facing off with, whether you know it or not. And some of that is just systemic related to the fact that crypto is so small and illiquid that these firms are trying to convince you there's real liquidity when there is no liquidity, right? Binance is no different, right? Like I've been saying this for a while, and it was very unpopular 9 months ago, but I think people are realizing it's true now. That just like with FTX and Alameda, Binance's entire business model was predicated on Merit Peak and Sigma Chain and all of CZ's internal market makers to make markets in a way that creates the appearance of a vibrant liquid market and all these tokens that doesn't actually exist. And so the SEC has a case there, right? Because BlackRock and Fidelity and some of these other big US regulated firms, they don't operate across those conflict of interest barriers, right? They say, look, we are your asset manager. We're going to charge you a fee, and that's all we do. We're not also your custodian. We're not also the exchange. We're not also the market maker, right? We're not also the clearinghouse. In crypto, people are playing all of these roles in part because they're filling a vacuum, and in part, frankly, because they're pulling the wool over the consumer's eyes. They want people to believe there's real liquidity when in fact most of it is wash trading. And I think it's funny that CZ has a long background. He's actually the one thing that I think CZ is definitely an expert in. He's an expert wash trader. He's incredible at it. He was doing it at his previous employer. He's still doing it now at Binance. And so the SEC and the CFTC don't like that for good reason, because it's very dangerous for consumers who actually believe that volume is real when it's not.
So we talked about the blurring of the lines of all of the different roles that these exchanges take on, which I think, FTX really shined a bright light on. You can't be the custodian, clearinghouse, exchange, market maker, all in the same platform. This news was kind of small when it was broken, I believe, last November, that Schwab, Fidelity, and Citadel were coming together to launch EDX Markets and exchange. Now, as I mentioned, they're only going to focus apparently on Bitcoin, Bitcoin Cash, Ethereum, Litecoin, because those are the four I think they view as commodities. But I think what's interesting here is, A, they're only going for institutions. So their pitch is, hey, you institutions who wanted to trade but don't trust Binance US and FTX, come here. But the other side of it is this is completely non-custodial. I don't know if you've looked into this at all, but effectively it's me trading from my wallet to you trading in your wallet. Doesn't seem like there's a custodian at all. So not the exchange, but also not a third-party custodian. It's basically peer-to-peer transaction, and it's a matching engine. So what do you think of this model? Because this is being championed by Fidelity, Citadel, Schwab, not three small players.
Well, this has been one of the arguments that Ethereum supporters have made against Bitcoin historically that I think actually hits, which is that Ethereum has allowed for the creation of all of these DEXs, starting with Uniswap, that allow people to do more kind of trustless trading, and Bitcoin natively hasn't historically allowed for that. So you do need this type of infrastructure to be able to trade directly from your wallet, and so I think it could be interesting. I mean, I haven't to be honest, I haven't followed it closely yet. It sounds like it's been funded, but maybe hasn't actually been built. But given the heft of the firms involved, you can probably expect, assuming something ever gets launched, that it will get some adoption. And don't be surprised if BlackRock eventually splits their custody business between something like this and Coinbase over time to de-risk the strategy. But what I would say, Scott, at a very high level, is that if you get a mega ETF, like a low cost, sort of not risk-free, but very frictionless, run by BlackRock, that gets scale, that's a huge win for Bitcoin globally, because it means literally every single person in the US in particular can now gain access to Bitcoin during market hours at a very low cost and in a brokerage account. And there are a lot more people who have brokerage accounts in the US than that have a Coinbase account. And that's why people bought GBTC, right? That was the only easy way
you could put
for
it
a long
in your
time.
retirement account. Yeah. So if you want Bitcoin in your retirement account and you didn't have a self-directed IRA, that's the only way you could do it.
Right. So this is if it gets done, it's a huge deal. And again, even if the SEC doesn't immediately approve Grayscale, or Fidelity doesn't buy Grayscale, et cetera, it puts a lot of pressure on Grayscale to adapt to that environment. And so, one thing that would help close the NAV discount is if Barry and Michael over at Grayscale would lower the fees, right? Which they could do right now, right? They could lower the fees. They could create a redemption mechanism, right? They could
But they don't
unwind the
have
trust.
to.
They don't, and their economic incentives.
Yeah, the economic incentive is okay. There's nothing coming in, right? We don't let it out. We can collect our 2 and 20 or whatever the fee structure is, and DCG isn't making money in a lot of other places.
That's true. I'm struggling to see where they're making enough money at all to cover the Genesis situation. I think Foundry's a good business, right? But it's not a big business relative to those. So Grayscale's the golden goose and potentially salvation. And so if Fidelity were to offer enough money that it cleans up the mess and allows DCG to continue to operate, kind of frees them from some of those liabilities, like I wouldn't be surprised if they work out a deal, maybe a deal where DCG retains some minority ownership, so they still have some piece of the upside, but they get enough cash to essentially take out the Genesis problem and forestall any potential legal liability and bankruptcy risk there. So we'll see. I mean, I told you,
They're
Scott,
supposed to be different businesses, which is why I laugh and I'm kind of giggling. But
yeah, but this is what everybody did. I mean, everybody, FTX, Three Arrows, you go down the list, Binance, everybody has like hundreds of entities, and everybody makes believe and pretends that they're really different companies, even though it's the exact same people in each entity. They're literally just used to ring fence risk and legal liability, and basically create these firewalls where you can mess up really, really badly here and hopefully not have it bleed over into this other. This is corporate structuring's it's an old art, right? It's not like something that they just came up with in crypto, but I think it's been abused to a point at this point where like it's just enabling bad behavior. Like look at Three Arrows. Like Three Arrows committed fraud. They lied to their lenders. They did all kinds of stuff, and those guys are still surfing. No sign that they're ever going to be held accountable. And part of it is that they have so many entities. It's really hard for anyone, even a very motivated person, to get to the bottom of what's going on with all these entities.
Yeah, and the real head scratcher is that Grayscale is suing the SEC for the ability to take GBTC and convert it into an ETF, but a GBTC conversion to an ETF would destroy the very business we just described.
Yeah, on one hand,
Grayscale's done with an ETF without that fee structure, right? Because there will be massive competition to reduce fees with other ETFs being approved, and the discount and premiums will be zero.
But that's always been the play has always been, though, to get enough scale that the fees can come down. What's unusual here is because of the intransigence of the SEC, this closed-end trust product, which was their regulatory arbitrage in a sense, right? Because they essentially have a closet ETF that they've had for years, and no one else has really been able to do the same thing. And so they've had a virtual monopoly on this Bitcoin trust product. And I think the idea was always like, hey, we're going to convert to an ETF and lower the fees, but at that point we'll have 50 billion or 100 billion in the product. And so it's a scale game. Like look at iShares. Look at BlackRock's ETF business, or look at Vanguard's ETF business. These are huge scale businesses with really low fees. Some of the products have 2 bips, 3 bips, 5 bips, 10 bips in fees, but they have massive scale. That was the play here. That play got disrupted and interrupted. But in the meantime, since nobody else can do it, they're still collecting their 2% on effectively $14 or $15 billion. And so if you were in the same situation, Scott, I'm telling you, you do exactly the same thing. You'd fight for the brand, and you'd want to keep the business alive, but you'd also, wouldn't stop taking the cash flow if customers are willing to continue to provide financing in a sense.
Yeah, it's they're just stuck in the middle of not enough volume to make the money as an ETF, and obviously having a somewhat broken product on the other side. I don't even saw this today, but CZ tweeted Deutsche Bank applies for digital asset license.
Yeah, I saw.
And these guys are. We're going to see every name, right?
Yeah, it's ubiquitous. It's like the chart of Americans' usage of refrigerators and washing machines. Like it starts slow at the beginning, and then it just goes parabolic, and then it goes to 100%. Because if a washing machine is a better way to wash clothes, or a refrigerator is a better way to keep your milk from spoiling, everybody's going to do it. And so, like Bitcoin, for example, has these systemic advantages. It's just better at what it does than anything else. And so, no matter how much noise there is, like volatility along the path of adoption, it's sort of irrelevant because we're going to 100% adoption, right, over time. And if that's the case, then yes, every single firm over the next 5, 10, 15 years will have an announcement about what they're doing in Bitcoin.
Yeah, I agree. I don't even think it'll take that long. I think they're going to all pile in now because they see that the door is open and this is their opportunity. Do you think that there's a realistic chance that an ETF gets approved with this current regulatory regime? I mean, do you think that that's part of the plan? There's a lot of conjecture, but I mean, does BlackRock, who's 575-1 on approvals for ETFs, do they apply this just to get in line or do they know something and think that they have a very, very good shot of getting approved?
I mean, I wish I knew the answer perfectly. I think we'll learn more from the market response. I think the market just opened 3 minutes ago. I'm very curious to see how GBTC trades today and this week. As I said in Spaces yesterday, I think you can learn a lot from tracking that discount, also tracking the discount of GBTC relative to ETHE, which is their Ethereum trust, will tell you a little bit about what might be going on under the surface. To the extent at which that NAV discount starts to close, then you might start to think that perhaps savvy market participants and people who are in these conversations maybe know about what BlackRock's real strategy is here. My initial gut reaction, but without doing a ton of analysis, is that I don't see it getting approved very quickly, just because the SEC is locked in a philosophical battle of sorts and a political battle of sorts with the entire industry. And so I don't see them just fast tracking the BlackRock product without a lot of discussion. And so that could be wrong and it gets approved immediately, and that would be huge for Bitcoin, but it almost never.
Huge, but they'd have a lot of explaining to do to all the other 22 who have been in line and rejected this entire time to prove that it's materially different. But
right, and it's also almost never that easy. So I would expect it. Yeah, their previous record aside, I would expect it to take maybe a little longer than the market thinks. But again, instead of trying to make a call on that, I'm just going to watch the trading of a couple of different things that I use as my proprietary indicators, and I will have a pretty good read on that soon based on the way some of these things trade.
I mean, you mentioned at the beginning, and we're going to transition in a few minutes over to Cheds and talking about some trading, but you, I don't know the exact numbers, but I know that you tweeted and mentioned on Spaces you held about 100,000 shares of GBTC, and you upped that in the last week or two to well over 200,000, right? Yep. So you mentioned a lot of that has to do with prime brokerage and your ability to own spot. But I think if we're being honest, a lot of that has to do with it's like buying Bitcoin, but also getting the benefit of that discount closing, right?
Yeah,
so going from 40-something% to 36% in a matter of days. Do you think that how far can that go on this BlackRock news, the discount?
Well, just the news of them filing it may not move further. That's why, again, I'll be watching it closely, because if it continues to compress, then that would lead you to believe that there's more going on here, right? And again, the major things that could change things are if BlackRock actually looks like it's going to get approved or does get approved. Of course, that would change everything quite quickly. There should be news related to the appeals court ruling, which I think is going to go in Grayscale's favor, because I listened to the entire last conversation between those three judges and the SEC and Grayscale lawyers, and it's just hard to leave that conversation thinking that the SEC has a leg to stand on. And in fact, that day the discount closed quite substantially. I think GBTC was up 9 or 10% that day. This was a few months ago. It was up 12%. I think 12.8% on Friday. So I think, look, I think there are a bunch of levers here, starting with BlackRock, but also potentially going all the way over to somebody like a Fidelity acquiring all of Grayscale. And if somebody like Fidelity acquires all of Grayscale, the first thing they're going to do is lower the fees. And then the second thing they're going to do is pull all the levers to try to compress that discount organically, right? So Barry offered, when this original discount came open last year or 2 years ago, the first thing that he did was offer to do a buyback, right? But initially, at least, he said, hey, we're going to buy a couple $100 million of it. He didn't actually use it. He was hoping the market would close it for him. Sometimes the announcement, right, the job owning about the actions you intend on taking are enough, and so you don't actually have to deploy any capital. You're actually saying this same thing right now with Icon, IEP, yep. Right? Icon was trying to close kind of the recent issues there. He was trying to use the buyback to do that. I think initially he was hoping the market would do it for him. So there's just a lot to watch here, Scott. And I think because there's so many catalysts, if you ever wanted or needed to own GBTC, now is probably the highest expected value time frame to own it, because you have so many ways that you can win. Like I can foresee a day in the next couple months where GBT is up 10% and Bitcoin's flat, because it's trading entirely on those discount catalysts, not on the price. Now, the other thing that to keep in mind is you're entering a Bitcoin bull cycle. You're almost certainly going to have some sort of Bitcoin bull over the next 24 to 36 months. The Bitcoin could go to 50, 60, 80, 100, whatever. So when you overlay that sort of bullish price setup combined with the discount catalysts, BlackRock, Fidelity, SEC, Fir Tree, Valkyrie, I just think like of all the trades you could do in crypto right now, long, just a straight long GBTC, just as a trade, again, not as a long-term, like I think Bitcoin and cold storage is a better long-term investment, but just as a trade, I don't see a lot of better, risk-adjusted investments than just buying GBTC as a trade here.
I love it, man. Well, now you can go back to bed. Or go run a 100-mile ultra marathon. You guys don't know, but Mike is a savage. What's the farthest you've run?
I've been running like 10 miles or so a day. Last week I averaged like 9 miles a day, but I'm trying to work back to just like basic. For me, basic fitness is I need to be able to run 15 or 20 miles on Tuesday. And for a long time over last year, which includes having a kid. And
I would say you had
stuff.
A kid, so like we all know how that affects things. So man, I love your perspective. Thank you for coming on. I know you get a lot of pushback, but it's sensible. People don't like pragmatism sometimes.
I don't even care anymore. Like it's completely irrelevant. I just spend my time investing, and if the trolls and kids want to get angry, it's like let them. So
yeah. I hear you, man. Well, thank you so much, and I'm sure I'll probably like see you on Twitter Spaces randomly in an hour or something.
All right, sounds good, buddy.
Thanks, man. Bye. Awesome, guys. Thanks once again to Mike Alfred. You guys should all follow him, of course, on Twitter. I believe it's down in the YouTube description, but if not, we will add it down there. Now, Mike said that we are entering a bull cycle here for Bitcoin. So I'm curious what Big Cheds has to say about that. What's up, Cheds? How are you, man?
Good. Hold on. I'm just entering my GBTC long. Hold on a second.
Everybody is currently getting long GBTC right now.
That's it.
I was buying it with my new Neuralink chip while Mike was talking.
How's that working out for you? Did you just blink twice?
Right eye is a bid and left eye is a ask, I think. Not really sure how it works, but it feels like that's what it is. So, Liz, you were probably listening in there. I know at the end you were getting your charts ready, so it gives us a perfect segue, guys. As you know, what we're doing now, we're not doing like the full trading shows. We're trying to knock out 15-20 minutes, people's best ideas, which I think is awesome. So we have to start at Bitcoin right now, right? Mike just said we're entering into a bull cycle. I think we're kind of in a crab market, but that we will get to the bull cycle personally, and I can make that case. But let's share your charts and see what you're looking at.
Sure. I mean, it is a pretty crap market. I mean, if we're honest, it's like Bitcoin's hanging in there and everything else sucks, right? Isn't that kind of the gist of it?
I think Bitcoin effectively is flat like in a week or 2 weeks, and altcoins on average are down 15-20%. So
yeah, I was thinking about like what's the theory behind holding some of these alts like for the long term? I mean, even especially Dino and older stuff, like, is it ever going to do anything? It's such a terrible regulatory climate and risk climate for these altcoins. It looks great for Bitcoin, but like, why would you hold like DOT or like some of these random ones like Link, some of this older stuff that's just, sushi. That's
because
just
you're a compassionate community, a passionate community member who is in it for the tech.
You're in it for the tech. You read the white paper. All right.
Yeah, the white paper.
So what can we do for you today, brother? What do you want? What do we got?
First I want to look at Bitcoin. Your chart looks exactly like mine. I dig that.
Yeah. Open high, low, close, green and red weekly candles.
Yeah. See, look. You got the same, good over here. We got the same thing. We got this big inverse head and shoulders, the retest of that 25-12. You have it as a zone, but yeah.
Yeah. It's, it's a generalized area. If you kind of try to simplify it, right? We try to figure out what happened. We all understand we had this epic move from, like 12K to 60K. We paused and we had this kind of, pause, right? And we had this dribble down, the price lost the 200, right? How do we simplify it? Well, weekly time frame, we understand when the price dropped, it tried to bounce, it rejected. When the price dropped, it tried to bounce, it rejected. So now that we're above that level, we're really paying attention, right? So just nice, clean, and simple. My whole analysis has been bullish above, cautious below.
Same.
And I did a Bitcoin live report. What is today? Today's what, Thursday or Friday?
Today is Tweens Day on the way to Flim's Day.
Flim's Day.
It's Tuesday. I don't know. It's Tuesday, I think.
It's some kind of in-between day. And so what I talked about was it was looking pretty rough. And it was right. I think it was like this day. It was like last Wednesday. And we're at like 5K. We're just below. It's easy to get scared. And what I said was, basically, you want to be dropping to lower time frame and looking for an entry here somewhere, because you have what's called a bullish throwback in play, right? A bullish throwback is where you have ideally a well-defined level. At some point, it's formed as resistance. You break through, and then you do a retest. That's called a bullish throwback. The opposite of that is called a pullback or an underside retest, right? Where you come through, right? So yada yada yada. Lobster bisque. Let me just get that out of there. Let's see. So yada yada yada, lobster bisque. So anyway, so the point is that you're above that level, and so it's bullish. And so when you're coming back, you're dropping to a lower time frame because you're at a key level. So what do? You drop to 1 hour. And so why would you ever be at a 1 hour? Well, you're at a 1 hour because you have the price at a key level and you potentially have some volatility. So here we were in my report, yada, 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 and we dropped, boom, okay, we're on a 1 hour chart. And we're looking at a move down, and we're looking at a consolidation, probably bearish continuation, right? Rising, bear, pennant, bear flag, whatever you want to call it. And what do you do in this situation, Scott, right? Like, you're looking, and for me, the best thing is you wait for a loss of a level and a recapture, right? A spring. You look for some type of a level of support to be lost quickly and then recaptured, right? So you got that. You got to, what's that?
Yeah, engineered liquidity. Swing failure. There's a million names for it. Yep.
It's one of those things where it's like, it kind of feels like a secret weapon as a trader when you figure it out. You're like, oh, wait, I can just look for a level to be lost and recaptured. And now I'm long from this level. And my risk is if it goes below, I'm out. Like, you have a really well-defined, seems like a simple trick. It's like, here's the simple trick the banks don't want you to know. It's like, it's like kind of that thing. So you got that nice little spring entry. And initially it looked like just a little mean reversion up to the 4H MA 200. It's my 200. There it is, right? Here's the spring. And it looked initially just like a, mean reversion to the 200, right? And we got there, boom, boom. Now we're above that. So we've got a little bit of momentum and continuation. So long story short, short story long, basically, weekly chart bullish, right? Daily chart had some consolidation. Daily chart kind of put you to the test right at the key level. But yeah,
dude, I've been screaming 225,000, 212 literally since March.
Yeah.
And people are like, dude, why don't you share charts anymore? I get it all the time. Like, the newsletter used to be all trades and charts and this and that. I was like, I don't want to touch altcoins, and I don't care about Bitcoin until it fills my bids at 25,200 that I've had sitting here now for 2.5 months. And they filled. I made my big Bitcoin buy, and I'm done now. We'll see what happens.
That's the way you got to do it. I've seen people, I like how everyone has different methods, but I don't understand people who are like, oh, I'm waiting for 22K or I'm waiting for 23K. It's, for me, it's just such a binary, like, this is the battleground. So we'll see what happens. We'll see if it holds it here. I saw an interesting tweet and I replied to it. I really try not to reply to other people's tweets because I don't want it to be like, either look like I'm trying to teach someone.
That's how you and I started and became friends, though.
Best buddies. But that's true.
On Twitter, we argued over an evening star or a morning star and the importance of the gap or something.
Yeah,
a civil argument.
It was about whether or not. Yes, we don't have to get into that.
I remember it. Yep.
Because you won that battle, but no, doesn't matter.
I think so.
But it was what was it trying to say? So it's going to talk about the fact we were back below the 200. Right, the weekly 200. And my point is that is a lower level of importance to do we hold the support zone.
God, I said the exact same thing.
It's just rank order. You
we
have
just become best friends.
Wait, did we
Some
just become,
activities.
you got to learn, and we'll get to some other stuff too, but you got to learn how to rank order data when you get so many different data points. And that's why horizontal levels are so important. That's why even with a moving average, you use a nearby horizontal level to structure your risks. It always comes back to horizontal level.
I mean, you can just look to the left there and what, now I'm here, let me just show mine. I mean, when you play with these MAs, you generally, like, even if it's resistance, you might get 2 or 3 candles above it, right? And then it drops back down or same above. So like the one test of an MA is dubious, at best. But that weekly candle there, I mean, a nice hammer right into that key sort of support to me is, it says a lot. I mean, I guess we'll see what happens with this 200, but to me, this just looks like another higher low forming. From the bottom.
But we're still kind of flagging or falling channel. I mean, you still got this action to play with. So we'll see what kind of if the immovable, force meets the whatever object. I mean, you've got the falling channel into the level. There's still some more to the story, indeed. But it makes it clean and simple to just say I'm bullish at 25K and above, I'm cautious below, and then just kind of build from there. Ethereum sucks, even though it's held nicely off the 200 daily, right? But it's just weak compared to Bitcoin, right? You kind of look at it.
I'm just going to cut you saying Ethereum sucks and repeat it over and over and over again and put it on Twitter and see them come for you.
They let them come for me. I
No
think
context.
everything's nonsense. I really do think I don't believe in any of this stuff. It's all a vehicle for speculation.
Agreed.
And it just makes it easier for me. But for
Not
now,
all of it,
but look at this. I've been watching this pair, Scotty, and the reason why I've been skeptical that Bitcoin's done is that there's been no bounce in Ethereum versus Bitcoin.
I thought it looked good for a minute, and then it got super rejected. By the way,
that reminds me of my high school
at some point. It got
days.
Exactly, super rejected right there. I was like, oh, we're gonna break out. It's great. No, it's bad.
It's bad. So that just, I mean, I people look at dominance. I don't need dominance to tell me that Bitcoin's a flight to safety right now. I don't need to look at a dominance chart to know that Bitcoin's holding up while everything else kind of sucks, right? And there's some stuff that's in there that's okay, like XRP, even INJ, Render.
Yeah, people forget the dominance, and I've been down this road of late because I had sort of a come to Jesus moment with dominance, and then Ben Cowan pushed back against me. But dominance moves because alts are doing badly. Yeah, it doesn't tell you alts are going to do badly.
That's right. It's just what's already happened. You kind of already know it. So I don't know. People kind of use the dominance chart. Let them use it. That's fine. But for me, I get what I need just by looking at Bitcoin and looking at select alts. So, I mean,
so to be clear, you focus on Bitcoin right now.
Yeah, I mean, look, I'm focused. Yes, I'm focused on Bitcoin, but I'm always studying alts, not only for Bitcoin Live, but for my own trading. Like, I always want to know where relative strength is, right? So, you've traded this stuff a long time, Scott. So have I. And so, Bitcoin can drop like $2,000 in a day, and like unexpectedly. And so when you have these big moves, I always want to know in my pocket what are the 2, 3, 4 strongest alts, because I go target those, right?
Yeah.
On crazy volatility, I'm always studying the alts so I know what's available for me in the right moment. And I'm not trading every day.
Do you see anything there right now? Like anything that's interesting?
Yeah, we'll take a quick scan. I mean,
by the way, Mike Alfred, I see you still there in the background. GBTC's booming, dude.
Yeah, is it? I think
it's filling up. Yeah, I think it's heading into the.
I'm on like a delay too.
But,
it's OTC, so you get the 15-minute. I don't have the
But it's just filling that little wick from last week already on the way up. Yeah.
Looks good. I don't know. MA200 for Ethereum. If you get a shot, that would be something I'd be looking at. The daily MA200. BNB, man, I like a contrarian play. Everyone thinks it's dead. There's a lot of FUD.
It looks so good here. Look at the 200 weekly. If we're talking about
MAs. 200 weekly, bro.
Yeah,
I mean,
look at that little red line right there. Listen, I'm not. I'm not trying to get into Binance stuff. If we're strictly looking at a chart, have at it. Yeah.
Well, why wouldn't you? I mean, you have the price. Okay, weekly chart, right? You have an uptrend. You have a rising 200. The price is testing it. I mean, this is where you would want to buy, right? And it's pretty well defined risk. You're not going to stick around below like 220 probably. So, and I like a contrarian play when everyone is sure it's done. All the news. That stuff gets you in so much trouble following the stories. It's like when it's time to execute your risk, you're going to be so you don't know where you are because you're reading a story. I mean, you got to focus on the price. That's always what I've always said. So anyway, BNB, I think it's of interest in this area. Mask, not so much. Fetch, not so much. Litecoin, yeah, kind of wait on that one. Let it develop.
But the halving's coming.
Is it halvening or halvening?
I don't know. It's how
have you figured that one out? Have you figured it out?
Have you figured out how to say halvening?
Like Ocean's got strength, right, compared to the market. So I'm looking to buy Ocean around 29.30 cents, right, as long as this zone holds, right? So I'm watching Ocean. I'm watching maybe XRP if I get a dip to 42, 43 cents, MA200 and daily, you know. I could see getting interested there. INJ, I'm interested 550, 560. Right? There's not many.
It's so interesting when the news aligns. By the way, like XRP, you just happened to mention.
Yeah.
Like this wick right here was the day of the Hinman docs.
Yeah. What was that? I saw Hindenburg.
They had the big release coming out. It pumped and then it came out, and then right before they came out, it dropped, and now it's back to. It's just interesting that the news days, you know, you get the. It was that basically it turned out there was likely kind of a nothing burger for XRP, maybe big for Ethereum, but maybe big for Ethereum. So
it's a little short. Like, look at that. Boom, boom, boom. You know, look at that little up thrust. So that was pretty clean. I mean, it's sideways. I mean, we're at the point now where we're like looking at this chart and saying it looks pretty good. I mean, so that's the climate you're in. When this chart,
bad news bears.
it's just sideways. I mean, it literally is sideways with a slight bullish kind of hint to it, or tint, or hue to it. INJ looks pretty decent. Render still looks pretty good. I'm a buyer.
Yeah,
you know, 160 daily MA200. I'd be interested there. I just don't know about altcoins right now, and maybe that's why you want to look closer, because it feels really scary. But
dominance would tell you that if you looked closer at it.
Yeah, I know. It's good. I'm going to get dominated by the market if I keep buying some of these SH coins. But like, look at like something like this, like Gala. It's no good. Like, there's people holding charts like this, adding. I'll add. Like, don't just keep adding. LDO, not so good. Look at DOT. Like, what is this? Oof, oof, oof. I mean, this thing is like CPR isn't even going to do it. I mean,
it looks polka dead. But
it looks polka dead. But then compared to Bitcoin,
if we say that, now that we said that, that means it's going to go to the moon.
To the moon, right? You know that song? I don't know, another crypto boy, CEO of being unemployed. Have you seen that thing?
It's like the parody video of Skater Boy or something.
It's something, but he's like, this Ethereum. It rings true. The guy's like, this Ethereum is gonna get me out of this town, right? And that's the feeling that people have, where it's like, this coin is gonna, like, you know what I mean? It's gonna elevate me and take me to the next level. But and so some people stack these things. And look at DOT, Scott, right? Here's against the dollar. Now here's just a great illustration of the market. There's versus Bitcoin.
Looks great, really,
right? I mean, so like some people are like, oh, I'm going to keep stacking, you know, whatever. But like, it's a smaller piece. It's a larger piece of a smaller pie. Like, look at that. I mean, just forget about it. So there are a lot of charts basically look like this: weak versus Bitcoin. People are selling it. They don't know what they can hold. Even like stablecoin FUD, and we'll circle back to Bitcoin. Even like stablecoin FUD, like people are like, oh, I can't hold my tether. Let me just buy Bitcoin. So it's like Bitcoin wins in the end.
It's hard not to agree with that sentiment. I'm just like reading all the breaking news that's coming in over here. FPL Wannabe wants to know when Ched coin.
Yeah, when Ched, I'm working on it. I'll let you know.
Launch a Ched coin that gives you your book.
Yeah, Ched coin, brother. Ched coin. No, I've never messed around with that stuff.
Every Ched coin you buy, you get a new quote.
You get a new quote for every book. So you get 365 Ched coins in total supply. Yeah. I've never messed around with that stuff, NFTs, any of that stuff. But maybe I'm not smart enough. So I'm not like casting aspersions on it. I don't know. What are you doing? Are you playing alts here or what? I'm
doing nothing. I bought Bitcoin at 25,200, as I said I would, for 3 months. That's where I focused all my energy, and now I'm going to wait and see what happens.
Like when we were at 30K, right? When we were at 30K, there's a lot of enthusiasm, and people were cautious, sure. And they said, I would love to buy back at 25K, but once it gets there, we're terrified.
They never do. Come on,
they never do. So how do we?
So I got to set the bid early and then put it behind like 2 FAs and
Right.
forget your password and do all the stuff that prevents you from going and moving it when it obviously hits, you know?
What was it I talked to you last time? You're talking about like having your keys scattered in like 20 different states and
Yeah,
all
you got to
these.
be a
I can't even
psychopath.
imagine. I can't even imagine like
Keys. People come for my keys,
that's
bro.
what you got to do. What a messed up space. You can't just buy something and
Well, I
potentially
will
watch
be
it
able to when
appreciate.
the BlackRock ETF comes
Yeah.
and with my GBTC, right?
But what
Have
about the
fun.
whole chain? They're gonna like pick a different fork and then control it, and so it's like a Trojan horse, or is that just conspiracy nonsense? I mean,
Dude,
is
I'm
that
so I don't know. Like
yeah,
everything goes in one ear out the other with me right now. It's so
yeah,
hard to find signal in the noise, but I'm gonna just go ahead and assume that's not a problem until I see that it is.
probably not. Yeah.
Yeah. Anyways,
Yeah.
dude, I
All
gotta
right.
go because we got Twitter Spaces in 15 minutes, guys. Again, we have JW Verrett joining Twitter Spaces today. That's the guy who just said Gary Gensler's fucked. So anyone who's on the fire Gary Gensler train, and this guy actually was Gary Gensler's advisor and thinks Gary Gensler's screwed, friend of mine, friend of mine. So we're going to talk to that guy. And I just found out I'm actually recording a podcast this afternoon with Warren Davidson, the congressman. So that's
You work
gonna be awesome.
way too hard. I hope it's worth it, brother.
No, it's great. It's all totally worth it. It's
I'm gonna get
whatever.
back to my video games after this. So
Enjoy your video games. Enjoy your video games. I'm gonna let you go, man. All right.
All right.
I
Good
gotta
talking,
get
man.
my
Thank you
ass
so
out
much.
here. Always
Peace
a
out,
pleasure,
Doc.
man. Thank you. And guys, of course, at the beginning, so you'll notice we've got like a new format here. You guys enjoying it? We have like some more people watching. But we're trying to do, like I said, we got Macro Monday, but on the rest of the days, we're kind of doing, do the news, have a guest. Tail end, we bring on a trader, share their ideas. Tomorrow, I think we have Chris Inks and Charlie Burton, 2 traders at the back end. After we're going to do the news and do the thing that we just did and tell you what's happening. Then we go over to Twitter Spaces, and it's awesome. Working hard here to build this show up. And of course, none of that happens without our sponsors scrolling. What if I could actually make that go faster? Like using AI or something? I could like DJ. I haven't heard that in a while, right? Bringing it back. But yeah, guys, you can trade all this stuff we're talking about pretty much on the old OKX machine. So go over there and do that and get a whole bunch of free money and maybe support McLaren and Manchester City like they do. Guys, that's all I got for you today. I have to go figure out what the hell's happening on Twitter Spaces today. Love you. What a good show. Appreciate you guys watching in. Thanks to Cheds and Alfred. Peace.
That's dope.